It has been quite the week, obviously, on the earnings front. Yes, absolutely. We need to get Danielle Shay's opinion, VP of Options at Simpler Trading, joining us as per usual for a Thursday. Great to see you, as always. Welcome back, Danielle. It's been, as I said, a crazy week for earnings. Crazy week on the economic front. Let's start with some of these earnings, and then we'll touch on what happened yesterday and even this morning. I mean, this GDP number was obviously not good, but let's rewind the tape, and then we'll look forward to what is coming tonight with Apple, obviously, after the close. But Google, Microsoft, it's been an impressive week, I guess, overall for these, considering the report's not that great. What did you think?
So, overall, the theme of this earnings season is that we know the economic data is weak. We know that we have companies missing earnings. I mean, for Microsoft to miss, incredibly rare. I mean, they never do that, right? But with Microsoft has a pattern where regardless of what they do on earnings, they generally keep rallying in the 8-day time frame post earnings. So, I actually really like Microsoft here. I think it's breaking out. After now, it's broken up above 275. I think you could actually trade it up to 290. So I'm just going to keep following the momentum on Microsoft to the upside. Definitely one of my favorite stocks in the market and one of my favorite long-term investments as well.
There's been a lot of pre-split talk, I guess, going into the split for Google on what could potentially happen as far as a rally. I mean, we've discussed it in the past on this show. Here we go with the earnings this week from Alphabet that, again, I mean, we discussed as well the fact that this earnings season, they've kind of talked up a big game and then come in where they needed to be. Alphabet seemed to be another one of those.
Yeah, and that's true. And I mean, it definitely did rally a bit after earnings, but I mean, compared to Microsoft, I would still consider it a dud. I was looking for a trade into the split in Google. That was a total dud. When I look at the way that Google has performed over the last 6 months, especially compared to a lot of other stocks and even just Microsoft, I mean, I would still say that Microsoft is the relative strength winner. Even though Google did trade slightly higher on earnings, I haven't found that move to be impressive. And I've been looking for it to roll back over because it did trade higher, but it just traded right into resistance. You have resistance at 115. You have even more resistance up at 120. So with that one, what I'm doing is I'm watching to see if it will fail at either of those levels. And then if it does, that's a spot where I'd like to sell some call credit spreads.
All right, obviously the biggest week for earnings season as we head into tonight. Apple, Amazon, Intel. Is there one you're focusing on, or is it all three? And if so, why?
So, when you look at these three tickers, especially in the option space, you have this unique ability where you can sell options on a Thursday and try to get out of them on Friday after vol crush is over. Of course, then you have to determine which direction you're going. Now, what's crazy about all three of these is, you've got the chip space that has been weak, but yet you have chip makers coming out and rallying post earnings. You have companies like Google, like Microsoft that were a little bit weak on earnings, and yet they're rallying post earnings. What that suggests to me is that, we have been accurate looking at the fact that we knew the economic data was going to be weak, but we almost got peak bad sentiment. And so even though I know it sounds crazy to say, I do think that Amazon's earnings are going to be weak. I think they have a lot of different problems, but I still think that they could rally. So actually, now that sentiment has shifted a bit, I'm leaning more towards selling put credit spreads on these, all three of them really. But I wouldn't do it just overnight. Like I mentioned, I would give yourself at least another week in case they end up falling first thing in the morning.
I want to get your opinion on, I didn't send this to you, I apologize, but I get your opinion here on Meta, obviously the big one from today. There was actually just a note that came out from Business Insider, guys, that says Instagram is killing the big product overhaul they came up with, I guess, the beginning of the week after the Kardashians, of all people, said it's a terrible idea to go further towards the TikTok model. So yeah, Instagram not going through with this update now for Meta. Let's talk their earnings.
So when you look at Meta, I mean, I was definitely bearish going into Meta. I was bearish going into Google. Those were the two out of the FANG stocks, well, and Amazon as well, that it really felt like they were going to have negative results. I mean, Meta has just been throwing money left and right at this metaverse. And I mean, this just isn't the economic environment that you want to be blowing money in. So I had anticipated that those were going to be weak. I still like the stock to the downside. And I mean, the Kardashians, hey, they have so much influence. I think they're right, number one. I think that it's ridiculous that these social media companies just keep trying to copy each other. But I mean, ultimately, I think that Facebook continues on the downward slide. I don't think anything's really going to be able to save them now. So I think continually just selling call credit spreads on rallies is the play there.
TikTok's obviously, I mean, eating everything for lunch right now, but it's, you know, it's its own product, I guess. And Instagram is unique in that sense for that reason. And it's, no, I agree 100%. A no-brainer for Meta. All right. You mentioned the current economic state of the world. A lot of that changed slightly this week. Another 75 basis point increase coming from the Fed yesterday. We get this second straight, I don't want to say the R word, but it's a second straight negative GDP reading. The overall market obviously on a bit of a push to the upside here, but where do we go from here as far as the overall market is concerned, and how are you positioning yourself around that?
So, you know, the irony of the recession news is that it's almost just the final kick in the can. But the thing is that it was so expected. You know, we've been talking about this for months. We've been saying, oh my gosh, you know, there's going to be a recession. And then what happens? It seems as though the stock market has already priced all of that in. And so that now that we have the actual numbers coming out, we're able to kind of breathe a sign of relief and actually rally here. So I think there's a little bit of irony in that. And I do think that this current move is breaking out to the upside and it is tradable to the upside. My main concern in the long term is just that even though a lot of these companies have rallied post earnings, the fact of the matter is that growth is slowing and they're still having so many different issues between the strong dollar, between inflation, between the war in Ukraine. You know, the list goes on, right? So while there might be some rallies that we can trade right here now, I mean, the economy is really not on stable ground, and that's going to continue to be clear throughout various earnings reports. So it just matters, you know, how traders are going to take that information and what they're going to do with it after the fact.
And more to come next week, obviously, as well. I mean, we're not done yet. There are some pretty exciting names to come next week. There's also this CHIPS bill that's being worked on in Washington right now. Apparently, they've hit 216 yes votes, which is well above what they need. So just watching intel here. Anyways, tell us what you're looking for or forward to coming up next week, more earnings.
So, you know, I actually really like the chip makers here, first of all. I mean, when they first started rallying based off of the CHIPS bill news, I mean, I really wasn't buying it because the thing is that it's going to take a long time to change that infrastructure. But the fact of the matter is that the news have really boosted the technicals. That, in addition to the strong earnings from companies like Texas Instruments, Taiwan Semiconductors, we have AMD coming up next week. That's definitely going to be a high area of focus for me. I've been watching AMD and NVIDIA very, very closely going into earnings. And if we can continue to get this NASDAQ breakout, those are two of the companies that I would love to trade higher going into those earnings reports.
Hi, Danielle. How are you?
Good. How are you?
I'm not doing too bad. I'm not doing too bad here. Yeah, great rally. I mean, thankful for that. And congratulations. You were pretty bullish there on Tesla, and that's been doing quite well in this environment as well. So congratulations to that one. Remember, you brought that up to us a couple weeks, and that was a great trade. What I want to talk to you about is this, and maybe I'm the one that has no idea what I'm talking about, which is most likely the case, but I mean, it's like Meta, and I just want to go back to Meta here, because when I look at a PE of 11 or 12 on this name, and I know that we've talked about, you know, this Kardashian thing with Instagram and this and that and TikTok. I actually said today that, you know, what kind of a great tailwind would that be if TikTok ever was banned, and then therefore we'd only have Reels. So I think that that's a little bit of something that could happen for Meta. But how would you play, and I might be what I was saying is I might be the only one on this side, how would we play Meta to the long side? Like, it might have some weakness over the next little while. Like you just said, the economy definitely in trouble here. But how can someone who thinks maybe 1 or 2 years down the road where they say, hey, there's no way Meta is going to be at this level. I think we may be back to 200 or whatever price may be. Do you often advise, some of the people that trade with you there on buying leaps or something like that in a name, or is it just too expensive right now because everybody's sort of thinking the same thing?
So, looking at Meta, on the, plus side, I'm looking at the chart right here. It's right down on like the dead lows of the year, right? You're holding up right above 154. So the argument against the bull case would be, hey, it's on the dead lows of the year and it's holding up and it had bad earnings and, what could be worse? So if you want to come in and if you want to buy leaps, 6, 9, 12 months in advance, you can absolutely do that. But, what I've actually been favoring during this market environment is, Google, for example. So I'm a Google shareholder, even though I was looking for weak earnings and I didn't really think it was going to explode to the upside. I'm still buying Google shares because in the long term, it makes sense. So with Facebook, if you really wanted to invest in the company long term, I actually think it makes more sense to just continually average into shares. And what you can do is you can work yourself up to a decent amount of shares. If you can get 100, 200, 300, 400 shares in a company that you want to invest in long term, then what you can also do is you can sell covered calls on those shares to help generate income against them, especially when the share price is a little bit lackluster.
Yeah, I like that. That was going to be my next question about selling against your position. So I think that's great advice as well. But anything in oil? I don't know if you have the oil chart up, and I don't want to take you off guard here, but that's that band dancing around 100. Are you just more focused on the equity side of things, or do you actually look at other things such as commodities with oil, natural gas, or even Forex, or are you mainly focused on the equity side?
So I don't look at Forex too much, but I definitely look at commodities, and I'm just looking off my screen here to check out oil because, it's interesting. I was actually looking at this chart the other day. If you go to the weekly chart, and sorry, my screen share was not working today, but if you go to your chart, weekly USO chart, what you can see is that you actually have a really nice trend overall. You've come down, you've held support, you're starting to bounce. I think that it makes sense to invest in USO in the long term. You also have some key energy companies that are going to be reporting earnings tomorrow. So when you look at, Chevron, Exxon, I actually think that now that they've come down pretty substantially, it would be a much better spot to come in and start selling puts against support, or just pick those up in a long-term account. When everybody was talking about it back in May, June, and everybody wanted to know, can we buy oil there? That was the high. And I remember you saying you wanted to short it there. And I was a little bit wary, but now that it's come down, I actually think it's a great time to start looking at it again.
Yeah, I don't think there's anything wrong with picking up some CVX down here either at these levels. Bouncing off that 140 and starting to go back up to the upside. But yeah, I'm never going to forget, you said June, I was like June 8th. I remember exactly the day when we topped out on some of these names, CVX. And then if you wanted to get, thanks for USO, I think that was a good call out too, but also the XLE, both. The XLE is 40% Chevron and XOM. So again, if you're looking for an ETF name that's a little spread out the risk, XLE is a good one. But okay, so you were bullish on Tesla and that's paid off. So now I think you were just mentioning Microsoft and some other names there as well. Can you give us a name that maybe you're more negative on right now, as that has possibly already reported? Is it going to be a Snapchat? Is there something right now that you are maybe accumulating on the short side?
Man, I have to tell you, Sean, I got Snapchat totally wrong. I was looking at Snapchat and I thought, they normally do really well on earnings. And I was just looking at it on a statistical basis. I got that one wrong, I have to tell you. But the main names that I've been focusing on the short side are all the ARK names, with the exception of Tesla. So, you've got Roku, Shopify, Spotify. Look at what happened to Teladoc today. The reason why I'm focusing on these names is because a lot of those companies, they're not even making profits on a regular basis. Their earnings are all over the place. And in this kind of market environment, the market just has absolutely no patience for companies that are losing money and are missing earnings on, such just terrible numbers. So I would actually focus on those companies. Yes, I understand the whole point of the ARK portfolio. It's long-term, 5-year plan, yada, yada, yada. Everybody loves to argue about it, which is totally fine. But right here, right now, in this quarter, the market is not going to tolerate companies that are losing money left and right, and they're going to continue to fall on any kind of bad news.
Everyone loves you, Danielle, and they want you to continue with us on the show, but we know that your time is tight, so I did want to give a big thank you to you, VP of Options Trading over at Simpler Trading. So we wish you the best and look forward to having you back on next week.
Thank you. I'll see you next week.
Ciao.